This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I want to do today is do a video on something specific out of the compression course. And I talk a lot about specific things I'm looking for in the bars or the candlesticks. What makes it attractive? If I'm looking at, let's say I have 100 different stocks to choose from and I've narrowed down the list to say, 20, and then you can't just follow 20 during the course of a day. You have to narrow that down probably closer to 3 to 5, something like that, at least under 10. One of the things I'm going to show you, I think, can really zero you in on what I think are potentially high quality swing trades. Now, I'm showing a swing trade that's going to be on the weekly, all right? And I think you can swing trade off the weekly. It doesn't have to be on the daily. But I want to show you a few things that I think can really help. Before I get into that, just so you know, if you have an interest in getting started in this approach, I would suggest starting with the book, and I am offering at a discount right now. Also, if you like the content that you're hearing, please hit that like button and also subscribe. Okay, so I've got FIS, Fidelity National Information Services, and I've got a weekly on the right and a daily chart on the left. All right, now what I wanted to show here is when the quality of the situation is really attractive, I want to favor the higher time frame. I get a significant amount of questions on this, and sometimes the entry pattern might be a little bit suspect. Is it a good entry? Is it not a good entry? There's a couple of contrasting thoughts that you're seeing based on the price action versus the MACD versus the ADX or maybe the volume, and you're trying to decide, do I put this trade on or not? What I always do in this situation is I look at the higher time frame, because that's the time frame I'm actually trading. It's the reason why I am entering the position. It's the higher time frame. The lower time frame is just to help us identify and lower our risk and try and get in right as the new trend or a new leg is getting going. All right, now most of the time when I'm looking at a swing trade, I'm doing it off a daily chart and using the hourly to help with the timing. But as I talk about in my swing trading course, you can do it off the weekly and use the daily to time. And instead of being in for, say, 2 to 10 days, you're in for 2 to 10 weeks. All right. And in this case, I'm going to show you one that you would only been in for a couple weeks, most likely. But I wanted to show the reasons why I think it's so attractive. So I want to show this specific example. Now, let me just pull up, let me actually look back in time, and we're going to see on the weekly chart how we'd been in a downtrend. We'd broken the downtrend line. We rallied up to the 40, all the way up to the 40. And then we came down and we undercut this low down here. All right, and you see how this broke this bottom right there, and then immediately reversed back up with a big green bar. So that's the kind of reversal I want to see as a potential 2. If you're going to test that low and undercut it and then reverse, that's a really good sign. So we had the 1 as the break of the trend line. The 2 is the test of the low, and sometimes you can undercut it by a small amount. And then 3 would be coming back up through this prior peak. So we have our 1, 2, 3 to the upside, but then look at what happens. We make a really strong move. We get good momentum going. We get confirmation by MACD and ADX, and then we get a pullback. And you can see the pinch play. You can see the green DI holding above red, also holding above the 25 line. And look at how the ADX is well above the 25 level. So we've got a lot of good things. Now, this might take place in maybe 15 or 20 stocks that you're watching, all right? And you got to figure out, okay, I can't do 20 or 15 or 20 trades, so I've got to go and look for something specific, and I always look at the price action, all right? The price action is really important to me. So look at this monster green bar, huge green bar, as follow through to the breakout, and then we get a little bit more upside, then we get another green bar here, but look at the way this pulls back. I mean, this is a thing of beauty. We get red bar, red bar, red bar, red bar, right? You get 4 red bars. Now, typically what I tell people to do is look for 3 to 5 consecutive red bars. Now, what is the red bar saying? It's saying that it's opening, relatively close to the high of the day, and it's closing relatively, at least in the lower half of the bar for the day. All right. And that happened 4 consecutive times. That's consistent selling. That's someone saying, you know what, I want out. And they either are taking profits, or people are maybe were looking to short it, and they shorted it at the wrong time, and they're just looking for a spot to maybe try and make a little bit of money that way. But the point I'm trying to make here is that we want this kind of orderly pullback, because what this tells us is that we don't have the type of resistance coming back up. This prior high can have resistance depending on the type of consolidation you make. If you notice here, look at this pullback. You see how we came down and then we rallied up, and we don't have 4 consecutive green bars. So when I look at this, I'm expecting more consolidation when I see all these tails in both directions and no consistency to the selling. It was kind of like a little bit of selling and then a little bit of buying, a little bit of selling, a little bit of buying. You see the difference in these pullbacks? This is a clean pullback. This is what we're looking for. It's clean. And then look at the bottoming tail. Comes down and touches the 18, which is above the 40, both lines rising. We got the pinch play. We've got good momentum. We come down to the midpoint of this big red bar, which is another thing that I talk about in the course, going through these bars and how important these big green bars are, big green and big red bars. And so we want to be on the lookout for the midpoint of those. It finds support there and then has a reversal bar. Well, when I see that, I'm zeroing in on this one. If I'm looking to swing trade, now that might not be the case if I'm doing a bigger picture trade, a trend trade. But if I'm looking to play for anywhere from a couple weeks to a couple months, I'm typically going to be zeroing in on this type of price action and saying, you know what, I think I can get in and get out, and it'll probably be pretty explosive. Might even want to, accelerate out of this move and show the dynamics that I'm talking about here over, basically off the low and then 2 to 3 weeks to the upside. So I think if you can identify and count 3 to 5 consecutive bars in a row, I think that can be a really powerful tool in your favor. Now, I will mention this. Let's just show you this also. When you get and move to the downside and look at what's taken place, do you see how when we undercut this low, it was 1 red bar, 2, 3, 4, 5, 6 in a row, and then we undercut. You see how we had consecutive bars in a row? And you notice how when we made this initial bottom, we had 1, 2, 3, 4, 5. 5 consecutive red bars in a row. Well, we should be on the lookout for some kind of a retracement. Now, if you can put the red bar, consecutive red bars in a row happening at a key level, you could actually get a lot more aggressive and say, look, I've got 6 down bars in a row, and now I've got a green bar showing up after an undercut. I probably ought to be on the smaller time frame if I want for some kind of a retracement back up into resistance. So you can use it in a number of different ways, but what I'm telling you is if you have the trend in your favor, you've got 20 stocks, and you're trying to narrow down the list, you can do that by using the bar count. All right, use a 3 to 5 red bar count. Look for that. The same thing holds true if you're looking at a downtrend and a rally. We want 3 to 5 consecutive green bars. And if you can count that way, it makes it a lot easier on the trigger side, because I know, yes, this had an ABC decline. I can draw in my trend line, so I could just come in here and draw in a downtrend like that, right? And that trend line will be used as an entry point. Now, if you notice, there was a little bit of overrun here, but there was no real selling pressure whatsoever. The ADX was still low, and this is borderline. When it's borderline like this, and it's hard to say, wow, I got a clean ABC, but do I go ahead and take this trigger to the upside? I always refer back to what this looks like. If the quality of this pullback is really nice, like the difference between this one I might not take this trend line break, but on this one, I probably will. All right, I hope this makes sense. We always want to refer back to the higher time frame, and I think it can settle a lot of question marks. So Is it a question mark on the trigger? Okay, let me look at the higher time frame and see how the quality of the pullback, the quality of the momentum. Do I have everything that I'm looking for in both MACD and ADX? If so, then take the more aggressive side of the equation. If not, then maybe wait for a little bit more confirmation. All right, so I hope this helps. So this is an example right now where we have a little bit of overrun. But again, I don't know that I like the quality as much, and we got overrun on this time frame. So that's a totally different situation. I'm going to go ahead and wait to play the higher pivot low, a higher low on this trade, while this one I would go ahead and take the trend line break. All right. Hope this helps. Hopes this puts some things together, maybe narrows down your list for you. Let me know if you have any questions. Thanks.